Hello traders, you're welcome to my video on the best free volume indicators. If you have been struggling with unreliable signals or getting caught in bad trades, then you are in the right place. In this video, we are just going to analyze free volume indicators that can help you filter out those bad trading signals and make more informed decisions. It's important to note that volume plays a crucial role in confirming price movements, and if you're not using the right volume indicators, you could be missing out on key insights. So before we jump in, make sure to hit that like button, subscribe to the channel, and ring the bell so you never miss out on more Forex trading tips. Now let us get started. So why is volume so important in trading? Well, volume tells us the strength behind a price move. When a price moves in a certain direction, when a price moves in a certain direction, volume helps us confirm whether that move is backed by a lot of market participants or if it is just a false move. Right? So if the volume is low, it might indicate a lack of conviction, which could lead to a reversal or fake out. In other words, volume is a powerful tool for filtering out the noise and determining whether a price move is likely to continue or if it is just a short-lived fluctuation. By using volume indicators, you can make smarter trading decisions, avoid bad signals, and increase the chances of catching strong, sustainable trends. Now, the first volume indicator that we are going to look at is the unbalanced volume. Okay? The unbalanced volume, or the OBV for short. It's a great tool for tracking the cumulative flow of volume. Now, what makes OBV unique is that it adds volume on up days and subtracts it on down days, creating a cumulative total. This gives you a clear view of whether volume is supporting an uptrend or a downtrend. Okay. For example, if the price is moving higher, but the OBV line is trending lower, it could be a warning that the uptrend does not have strong support. All right. So you can see what happened here, that while this uptrend was still ongoing, the OBV had already started coming down gradually, showing that this uptrend was losing momentum. And guess what? Shortly afterwards, we had a decline. So, on the other hand, if OBV is moving up alongside price action, that suggests strong buying pressure and a higher likelihood of the trend continuing, like what we had here. And as you can see that the trend actually continued. Price continued going up. So OBV is a simple yet effective indicator that can help you avoid false signals and get a clearer picture of market momentum. So next up, Let us look at the volume weighted average price. Okay, the VWAP, VWAP. All right. Now, this indicator is often used by institutional traders to assess the average price of an asset based on both volume and price. It gives a more accurate picture of the average price at which an asset has traded during a given time frame, weighted by volume. So what is great about the VWAP is that it helps you see where the price is relative to the average price for the day. So if the price is trading above the VWAP, it suggests that the buyers are in control. And if it is below the VWAP, the sellers might have the upper hand. So VWAP is particularly useful for day traders as it helps them identify support and resistance levels and gauge the overall market trend. If the price is moving above the VWAP, VWAP or VWAP, right, with increasing volume, that's a strong signal and it means that the trend could continue. Okay, so now watch out for the widening of this bar of these lines, because when the white lines are widening, it shows that there is strong volume. So when the on the other hand, when the lines are narrowing towards each other, it shows that there is low volume and possibly a period of consolidation like what we had here. So when you notice the lines begin to widen, begin to go apart from each other, it could be a sign to enter a trade in that direction of the breakout, because you can see a breakout happened here, for example. Now, as this breakout happened, you notice that the lines had begun to widen already. Even from here, you can see it has begun to widen. So if you quickly enter a buy, set your stop loss below the swing low, and then you can just wait for the VWAP lines to begin to contract again, and you exit your buy trade, and you wait for another breakout to happen. You can see the lines began to widen again. So it will have been another opportunity to enter a buy after this consolidation again. And then if you had entered a buy, you can set your stop loss below the swing low again, and then you wait for another contraction and you exit. And then right after the contraction, you will notice the VWAP begin to widen again, and so on and so forth. So this indicator is actually great for trending markets. Okay, now the third indicator we are going to be looking at is the accumulation distribution indicator. Okay, the AD line, let's just add it to the chart right now. The accumulation slash distribution, it tracks the cumulative flow of money into or out of an asset. It takes both price and volume into account, measuring whether the asset is being accumulated, or that is bought, or distributed, that is sold. So if the AD line is trending higher, right, just watch out for the trend of the AD line. If the AD line is trending higher, it indicates that there is more buying pressure. It indicates buying pressure. All right, so you can see, like at this point, when the AD line was trending higher, when it was trending higher, you can see that there was actually significant buying pressure, right? There was significant buying pressure. But if the AD line is trending lower, right? If the AD line is trending lower, for example, what was happening here, the AD line is trending lower, it shows more selling pressure and the asset may be in the process of being distributed. So this indicator helps you spot divergences between price and volume. For example, if the price is rising but the AD line is falling, it could signal that the trend is losing steam and a reversal may be coming. So the AD line is particularly useful for identifying market shifts early, allowing you to take action before the price fully reacts to changes in buying and selling pressure. So now that we've covered the OBV, the VWAP, and the AD line, you might be wondering how to use these volume indicators together for better trade setups. Here's the trick. Do not rely on just one indicator, okay? You can actually decide to combine these three indicators. You can use them together to get more accurate reading of the market, okay? For example, maybe you have the OBV trending upward, confirming the strength of an uptrend, and maybe the AD line is also showing accumulation. It's a good sign that the trend has strong buying pressure. Or maybe you can just add the VWAP to also gauge whether the price is trading above or below the average price for the day. So there is no harm in combining the three indicators, okay? But that is if you are comfortable with having three indicators on your chart. All right, so that is it. So that is a wrap on this video. The best three volume indicators: the OBV, the VWAP, and the AD line. They are powerful tools that can help you filter out bad trading signals and focus on more high probability setups, okay? But remember that no indicator guarantees profit, okay? These indicators are not excluded, right? They do not guarantee profit, but they can be additional help in your trading. All right. Remember that volume is crucial in confirming trends and price moves. So do not overlook these indicators in your trading strategy. If you found this video helpful, make sure to hit the like button, subscribe to the channel, and ring the bell so you never miss out on more trading tips. Okay. Drop a comment below if you have any questions or you want to discuss how you use the volume indicators in your trading. Thank you for watching, and I hope to see you in the next video. Happy trading.